members, welcome you over to the study circle meeting on TDS and TCS and related provisions under the New Income Tax Act 2025, including proposed amendments in the Finance Bill 2026. We have our speakers CA Ganpatlal Kawad and CA Shirish Shah. I request Chairman Bangalore Branch Bengaluru to please escort both the speakers and present them the floral bouquet. Round of applause, members. Members, I would like to introduce the speakers, and it's a privilege for me to introduce them. CA Ganpatlal Kawad is a senior chartered accountant specializing in direct taxes with expertise in income tax matters. A rank holder, All India rank 4th rank in the CS Intermediate Examination. He brings strong academic credentials and extensive professional experience to his practice. He is associated with GRB and PK Chartered Accountants and completed his articleship with HC Kincha and Co. He has held key leadership positions including Management Committee member of the Bengaluru branch of ICAI for the year 2000 to 2007. A chairman and chairman of Bengaluru branch 2006 and 7. He is also a former director of SKCCI. In addition to his professional practice, he has presented papers at various study circles and seminars and remains actively involved in several social and religious organizations. With that brief introduction, I introduce before you the esteemed speaker and past chairman, Bengaluru branch, CA Ganpatlal. Yet again, I would like to introduce the second speaker, Shirish Shah. Shirish Shah is a seasoned chartered accountant with over 23 years of professional experience in taxation, audit, corporate laws, and regulatory advisory. He is a fellow member of the Institute of Chartered Accountants of India and has qualified examinations conducted by Institute of Company Secretaries of India and Certified Information System Auditor. He also holds a bachelor degree in commerce. Shirish is currently a partner of Chandrakant and Co. Chartered Accountants. Prior to entering practices, he was associated with South India Tax and Regulatory Service Practice of Grant Thornton, Bharat and the Transfer Pricing Group of PricewaterhouseCoopers. A respected academic contributor, Shirish has been a regular faculty member at the Institute of Company Secretaries of India, Bengaluru, delivering lectures on accountancy, audit, economic laws, corporate laws, and taxation laws. He has also been invited as a guest lecturer and speaker at various institutes and corporate organizations. With that brief introduction, I present before you esteemed speaker, CA Shirish Shah. Both the speakers will be taking up interchangeably, and we have, as a regular practice, we have 6:30. We'll be having meetings. Thank you.
Good evening, ladies and gentlemen. At the outset, both of us thanks Bangalore branch and its committee members for giving us the opportunity to share our limited thoughts on the today's topic. As you are all aware, the Act is new for all of us. IT Act 2025 is new for all of us. All of us are sailing in the same boat. I can see the various senior members sitting here doing practice maybe from last 30 years, 40 years. But for all of us, this is a new act. At the outset, let's understand what was the need to have this Income Tax Act. Though this point might be deliberated at various levels by various speakers during the earlier time discussion, we are all aware, we are all working with 1961 Act, which is familiar to all of us very well. It's from last 6 decades the Act was there. And even if the new Act 2025 comes into picture from the 1/4/2026, still we have to carry on with the 1961 Act as the present Act, even after 1/4/2026. 1 year directly to file our return for 26-27 assessment year, all its procedure and all those things. And thereafter, we'll have a scrutiny assessment, 148, 147, 148, all those assessments which will take at least 6 to 7 years to in a regular practice. And even after that, if there is any dispute is there which may take years together, we may have to read if you are at the CIT appeal level or the tribunal level or the someone at the high court level, we will have to argue on the 1961 Act. How long? I don't know, because if I recall, the last judgment in 1922 Act was delivered in 2000. After 40 years of its repeal, the last judgment delivered by the Supreme Court in 2000 on the 1922 Act. So we don't know how long we'll have to carry the 1961 Act. What was the need? They said lot of amendment is there, so many sections are there in this, so many provisos, so many explanations, so many judgment. So let's have a simple act. So in that background, they have brought us 2025 Act, Income Tax Act 2025 Act, which was enacted in 2025, which will be applicable from 1/4/2026. What are the major changes? In the 1961 Act, which is applicable as on date, had almost more than 700 sections in it. Though if you see the precise number, last section is 298. But if you see the number of section in between, let's say 44A, 44AA, 44AB, AD, ADA, like that, we have more than 700 sections in 1961 Act. That has been brought to 536 sections in 2025 Act. We have 23 chapters. As on date also, we have the same number of chapters. The number of schedules have been increased from 14 to 16. But as far as proviso and explanations are concerned, if you see the 1961 Act, each section you will find some proviso and then explanation to it. In 2025 Act, we don't have any proviso, there is no explanation at all. All the provisos and the explanation has been embedded in form of a subsection or clause, subclause. It is not that the proviso and explanation has been completely moved away. Nothing has been moved away. It has been put in form of either subsection or clause or subclause. Effectively, currently the applicable Act is 1961 till 31/3/2026, and thereafter from 1/4/2026 the new Act of 2025 will be applicable. All sections are now serially numbered 1 to 536. There is nothing called 44A or 44AB or something like that. It is all serial number 1, 2, 3, 4, 5. Whatever we have, so many omitted clauses was there in the 1961 Act. Now nothing is there because it is new. In the budget, in the Finance Bill 2026, one of the clause has been omitted by Finance Bill 2026 in the new Act. So there will be a gap in between at one place. But the rest of everything is serially numbered. They have shifted, we are all aware, we are all familiar with the previous year and assessment year. Now they are moving from that to tax year. So now henceforth we have to remember tax year. What we used to call financial year 25-26, assessment year 26-27. Now it will be a tax year 26-27. Even at the time of the filing of the return, when we file in the next tax year, we file the return for the last tax year, but it will be treated as the same tax year 26-27 or 27-28. So it's a concept of previous year and the assessment year has been done away with. They brought it to the tax year. Now, with all those changes, is there a simplification in the IT law? There is change in the number of sections, chapters, proviso have been moved, explanation has gone, sections are serially numbered and all those things. Still, we have to see whether there is any simplification, which we will see during the course of our presentation. One more thing I will like to say here, that I and Shirish will be taking interplay, some section I will taking, some he will take, in between will be keep changeovers, doing the changes. Now let's come to our topic. Having the broad idea of why this 2025 Act has been brought in, let's come to the today's topic, provision related to TDS and TCS. I have made a small table which depicts what we have in 1961 Act and what is there in 2025 Act. All along in our presentation we will keep telling what is there in the 1961 Act, what is the corresponding provision or the corresponding section in 2025 Act. So if you see at the 1961 Act, it was chapter 17B and BB. Under chapter 17, we have different subchapter, that is chapter 17B and BB. Now we have chapter 19B. Under this also come under the advance tax and recovery of the tax. So it is 19B. How many sections we have in the TDS? On which those are the sections which are effectively telling us to deduct the TDS. Not all the section, processing section or other section. The section in which we are liable to deduct the TDS, there are 43 sections. Like 192, 193, 194, 4A, 4B, 194B, BB, BA, 194L, LA, LA, LAA. Like that we have 43 sections ranging from 192 to 196D. The last section in which we have to deduct TDS is 196D. So ranging from 192 salary to 196, we have 43 sections in which we have to deduct the TDS. Now there are only 2 sections. So it becomes so simple, no? Instead of remembering 43 sections, now we have to remember only 2 sections. 392, 393. That's all. 192 become 190, 392. 193 to 196D become 393. 2 sections to remember to deduct the TDS. In TCS we already have 1 section, only 206C. Now also we have 1 section, 394. We have number of other sections where we have to issue various certificates, apply to the AO for getting low deduction certificate, like that, processing of the non-compliances. We have 23 sections in relation to those things other than where we have to deduct the TDS. That has been brought down to 8 sections. So all together we have in 1961 Act 67 sections in both TDS and TCS put together. Presently we have only 11 sections, sorry, we have 11 sections which covers entire TDS and TCS provisions. The effective date 1961 Act is applicable today. From 1/4/2026, the new Act will be applicable. Act 2025 will be applicable. Now, after the reduction of so many sections from 67 to 11 or 43 to 2, there is a simplification or it become more tedious? We need to see in the due course. Now, why we have chosen this topic today? We thought that this is the section which is going to be applicable immediately the moment your tax year starts, sorry, not financial year, tax year starts. So if you, for example, if you purchase goods worth 1 crore rupee on 1st of April, you have to deduct the TDS on 1st of April itself. So this is the provision, this is the law, the part of the law of Income Tax Act 2025 which will apply immediately on the start of the tax year. So we thought it fit to let's have a discuss. We are also new to these provisions as all you are. We thought let's share our understanding with you on this. Now this table shows what are the section we have, what is the new section number we have. TDS on salary we have 2 section 192 and 192A. Now we have section 392. Other than salary, we have a 190, as I said, 193 to 196D. It is now one section, 393. The number is synonymous to remember 192, 392, 193 to 196D. It is 393. So at least it is easy for us to remember the section. So 192 becomes 392, 193 onward becomes 393. We have a TCS with the one section 206C. Now it becomes 394. So they have taken it in order. All the TDS, TCS has been taken into the order. Then there is we have a declaration. When we give the declaration in form 15G or 15H, there is no need to deduct the TDS. That has become part of the section 393 itself in one of the subsections. Then we have for the low deduction certificate or no deduction certificate under section 197, that becomes section 395. We have compliances and reporting which ranging from in so many sections. Now entire compliances and reporting has been bundled together and put into section 397. We have consequential to failure to deduct the tax or collect and pay the tax. It was section 201 and 206C. Now it has been moved to section 398 of the new act. There was a procedural no TDS and TCS return. Section 200 capital A and 206 capital CB has been moved to 399. Then we have power of the central government, which was there in the various sections. Wherever they thought it fit, they put it. Whenever there is a difficulty arise, central government has power to remove the anomaly, remove the difficulty. It was there in most of the sections. Now they have put it together for all the sections at a single section at 400. Bar on direct income, direct demand from the assessee was in the 205. Now it is 401. And the interpretation. We have interpretation. We used to call it as a definition under various sections. Proviso and the explanation used to give us the definition of the clause or the FERA in that particular section. Say for example, specified person. So specified person was defining various sections wherever the word was used. Now all the definition has become interpretation. They said it is an interpretation. So we have to interpret now in a fashion what they have given, and that is all interpretation has moved to section 4.2. Now how this is going to lead us to have a simplification or have more complications, we have to see. The more things change, the more they say the same. We'll move forward. TDS on salary, section 392, it will be taken by Shirish. Over to Shirish.
Thank you, Ganpatlal. I hope I'm audible in the last rows. I'll take one step back and also bring in one fun fact. Year 26-27 is going to be unique because it will get scrutinized twice, once under the old law and once under the new law. So it's a small unique situation that we will have because right now we are looking at assessment year 26-27. As soon as 1st April starts, we will still be talking tax year 26-27. So it will get a review from the tax office on 2 occasions. Okay, Ganpatlal broached on the subject that the number of sections have been brought down. Please don't get fooled by that. The numbers are definitely less, but the content is much more. As soon as we complete the salaries portion, please prepare yourself for a barrage of different ways to look at things, which is one reason why we put down saying, the more things change, the more they remain same. The context, of course, being that if you really take a look at the law, it looks like they merely renumbered, removed all the alphabets. We no longer need to know the 10As, 10Bs. They removed those alphabets, but largely the provisions have been the same. So the intent was to simplify the law. We will get to evaluate how far we have reached. But this is also an occasion for us to understand and look at how the approach has changed between the law as per ICAI 61 and the proposed, or rather the new law which will come into force from ICAI 25. It will require us to unlearn the approach that we have followed. No longer will the section refer to everything that was covered. It used to be somewhat self-contained. Going forward, we will get an idea of how differently we will have to review the entire transaction. In the process, salary is among the relatively simpler provisions. It continues to have similar provisions as the old law under 192. Deduction will happen upon payment. The rate is still the average rate. If there were a case of perquisites non-monetary, as with the old law, under the new law also the option to pay the tax, mind you, that will still be income for the recipient employee. The payment of tax could be a deduction, or the employer could pay out of his own. A small change is in the way sweat equity gets considered. There is a specific subsection which looks at eligible startups. These are those that have been registered with the government. In such a case, the taxation under TDS will move from what we would call as vesting to the time of allotment or transfer. Only in the case of eligible startup related securities. The other provisions or the definitions are largely similar to the old law. You continue to collect details which the employee gives. The losses that you can consider will only be related to house property. Losses under any other head, and the employer need not consider. This has been the existing law and will continue under the new law also. I will specifically use the word, the employer will give a form as a certificate that confirms the TDS. It will no longer be called Form 16. In due course of the session, we will come across what are the new forms. Of course, slightly digressing, but typically what we would like to do is, if there are queries, you could raise it then and there. Part of the presentation, we will take it. If some of these cannot be immediately answered, we will try to answer them to the end of the session. The employer can make adjustments in the TDS during the entire year. It is an average rate that is flexible until the end of the tax year. Provident fund, the rules continue to be similar to what they have been in existence. The reference to the schedules, of course, will undergo change. If the drawal happens to be more than 50,000 from the Provident Fund, the TDS provisions will kick in. This small or a brief interlude before we step into the largest section that you will come across, and I will hand over the mic back to Ganpatlal.
Thank you, Shirish, for elaborating on 392 related to the salary. As you rightly said, there is no much change in the provision of the law. It has been moved in the different sections, but the law more or less remains same. We will move forward and take the TDS other than salary. We have altogether only one section section 393, which replaces 41 sections of the 1961 Act, where all we need to deduct the TDS, the different sections. If everything moved to one section, section 393. That way, if we see, instead of going through the various sections, we have to go through only one section. On what all things we have to deduct the TDS. Section 393 has 11 subsections, and each subsection gives us the different idea or the different item on which we need to deduct the TDS or other process what we need to do on deduction of the TDS other than salary. We have a sections in 1961 in a haphazard manner. One section comes say you deduct tax on resident, then next section will come and say you have this section apply to non-resident, then the other section says this apply to both resident and non-resident. So it was in a different places in a haphazard manner, which has been placed properly now in different sections, in subsections. Subsection 393(1) talks about the all payments what need to be made to the resident has been bundled together in section 393 subsection 1. All payment which are liable for the TDS or the payment to made to the non-resident which is applicable purely to the non-resident is bundled together under 393 subsection 2. We'll take each section in each subsection in detail. I'll just give you the broad idea. We have the section where we need to deduct TDS irrespective of the residential status of the payee, be a resident or be a non-resident. We are liable to deduct the TDS. So those kind of a sections has been bundled and put together in section 393 subsection 3. Now we have a section 197, or rather in those section itself they have carved out certain exception. Say for example 194C. In 194C, if the person is flying and hiring the vehicle which is less than 10 vehicle, and if we give a declaration, we don't have to deduct the TDS. So 194C itself says what are the exception in that. Now those exception has moved to or put together for all the sections put together, it has been put in 393(4) subsection 4. So you may have to look into 393(1), go to 393(4) and see whether any exception is there or not. We will have a chart depicting a chart how we have to look into. So this will tell us whether it become a simpler or it become a more tedious or more complicated. The 393(5) talks about various pay which are exempted from the TDS. We have if any payment is made to the central government is exempt from the TDS. This was there in various sections. Now this all those pays which are exempt for various reasons has been moved to in a single section 393 subsection 5. Then we used to get the declaration for non-deduction under section 197. That has been put in 393(6). We have 5 more subsections which are procedural in nature, which will take in the due course when we move one after one. Now let's say, look at 393 subsection 1, what it says. This is a bare reading what is there in section verbatim as it is. So I'll just read it, then we'll discuss. Where any income or sum of the nature specified in column B, that means there is a table. B of the table below is credited or paid or distributed by the person specified in column C during the tax year to a resident, the person responsible for paying such income or sum shall deduct income tax A on the entire amount of such sum or income where the amount or aggregate of the amount exceeds the threshold limit specified in column D or on sum as per note 1 for serial 82 as the case may be, at the rate specified in column D at the time of credit of such income or sum to the account of the pay or at the time of its payment in cash or by way of check or draft or by any other mode, whichever is earlier, and I repeat, and subject to provision of subsection 4, 5, 6, 8 and 9. So we can break the entire section into where you are making payment to a resident for any income or sum of the nature specified in column B of the table. So we have no specific items, it is all items as put in a table form, which is either credited or paid or distributed to any person by the person. So the deductor as specified in the column C of the table during the tax year, what we have in the previous year, now it is a tax year. The person responsible for paying that has to deduct the TDS on the entire amount subject to the threshold limit given in column D of the schedule and at the rate specified in column D of the table, either at the time of the payment or at the time of the credit, whichever is earlier, subject to certain conditions or certain sections 4, 5, 6, 7, 8. Let's go to the table. It's so simple. Everything at wonder what you need to do has been given there. Now what table says? We have a different kind of a payment at different places. Say for example insurance, for example commission. We have insurance commission. We have a commission other than insurance. So at two different sections at two different places. Now they have put under table they have given a various serial number. It is from serial number 1 to serial number 8. Each serial number gives the particular payment which was earlier scattered, now put into sub-serial number. 1, 1, 1, 2, 1, 3, 1, 4 or 5, 1, 5, 2, 5, 3, 5, 4 like that. The first under table, first serial number is serial number 1, which is commission or brokerage. Sub-serial number 1 says any income by way of remuneration or reward, whether by way of commission or otherwise, for soliciting or procuring insurance business, including business relating to the continuation, renewal or revival of the insurance policy. This is what exactly we have in 194D. I have put the additional column in the table, column E, which is not part of the act. For our easy understanding, what we have in the previous act, in the 1961 act, which is the section which has been moved down. So it's more easy for us to understand. It says any person. So any person paying this type of a commission has to deduct the TDS at the rate or rates in force. Rate or rate in force, we are all aware. It was there in the 1961 Act, is also it is there. So we have to go to the Finance Act and see the rate given there. As per that rate, we have to deduct the TDS. Threshold limit is 20,000 rupees. It is similar to 194D. But in 194D, we have a certain definitions. We have an exception also. Now we don't have any exception here. We don't have any definition available here. For that, we may have to look into different sections or different subsections. So what we have in what we have as on date in 1961, each section is a code by itself for that particular payment. Either be interest or insurance commission or a professional fees, whatever need to be done for that particular payment, whether it is exempt, whether there is any exception is there, or whether any pay is exempted or not, everything was there at a single place. So each section by itself was a code. You look at one section, you will come to know what you need to do. Now that has done away with it. For that, we may have to look into different subsections. Now here it says table 1, column item 1, sub column says insurance commission. Any person pays insurance commission, deduct the TDS at the rate or rate in force with the threshold limit if it crosses 20,000 rupees. That's all. If there is any exception is there, we may have to move to 393.4. We will see that later, how it works out. Then second is commission, what we have under 194H is now there under serial number 1, item 2. So any income by way of commission not being insurance commission as referred in serial number 11 or brokerage. So now we have to remember serial number with sub-serial number to cross each other. So many places serial number will be referred now. Other section will be referred, but so many places you will find serial number is getting referred. So we have to acquaint with various serial numbers of the table to understand the law, which was there self codified in a single section, which has been scattered now. So based on this one section where we have to go, we have all other sections how we will have to go. We have made a chart that how the flow of the TDS will work from the starting seeing a particular payment till the end. We deduct actual TDS has been made, where all we have to go and come to the end. First you have to identify the pay, whom you are making payment. So first thing to identify the pay, resident, non-resident or any other which included in all the categories. Then we have to see type of payment, what type of payment we are making, whether it is a rent, whether it is insurance commission, whether it is a brokerage, what kind of payment it is. Then in table in which serial number it falls. Once you let's say it falls in serial number 2, then you have to check there is a note below. For that particular reference there is a note is given which gives some kind of an explanation that this particular has to be read like this. So we have to see the note. Down the line when you go to the other in the serial number in the table, we will find the note also. After looking at the note, we have to go for the no deduction. So we have to go to section 393 bracket 4 and see whether there is any exception is there to that. As I said in 194C, we already have an exception if the person is planning on hiring the motor vehicles having a less than 10 number and he give us a declaration. We don't have to deduct the TDS. But for that now we have to go to the 393.4 separately, which is not part of the serial number. After looking at that, when we have identified the pay, we have to see who is the pay, whether it is government, whether it is an individual, whether it is an HUF, or is that particular pay is an exempted. For that purpose, we have to go and check section 393 subsection 5. 5 list out, subsection 5 list out various pays who are exempted or given some threshold separately. So we have to first identify the pay, what type of the payment we are making, then go to the table, find out which serial number it fit, then see if there is any note below the serial number, then go to the 393.4 saying that whether there is exception or the exemption is given to that particular payment or a particular person, see the pay whether it is an exempted pay. After that, you have to go to the interpreter section 402, which given an interpretation of various words. You have a payer, let's say payer is a specified person. Now who is a specified person? Where is the definition of it? Section doesn't, or the table doesn't give its explanation, it doesn't give its definition. Now they don't call it as a definition, they call it as an interpretation. It's a separate section by itself. So specified person is defined. So specified person is defined in section 402. We have to go to the 402. After looking at that, whether I fit into specified person or not, then we have to go, if required, we have to go to the general definition in section 2. If the particular definition or the particular interpretation of the particular word is not available in 402, we have to go to the general definition under section 2. And then finally we have to decide, we have to proceed whether the TDS has to be made or not to be made. So we have to go 9 steps, starting from the identifying of the pay and to the actual deduction of the TDS. Now I think you will be able to tell me whether it is a simplification or it is a more complication. The whole premises of bringing new act is to simplify the law. I am not able to understand whether we are simplifying it or making it more complicated. If I used to read section 194C or 194A, it gives me the entire definition. If the specified person definition is available there only, if the threshold limit is available there only, what was my previous turnover for 194Q, whether I am eligible buyer to deduct the TDS or not, all definitions, all exceptions, all explanations were there at a single place in each section. Now that has been scattered across the sections. Though the number of sections has been reduced from 67, what we have seen, to 11, but I feel it has become more complicated. TDS has become more tedious rather than become a simplification, because we have to look into so many places, and for each serial number we have to do this process, because we don't know what is sitting in 393.4, what is sitting in 393.5, what is there in 402. If it is not there, what is there in the section 2? A word interest is not defined in 402, we have to go to section 2. What all interest includes? When we pay interest, what all it includes? It includes so many items, not only the interest alone. It has so many other things included in it. But the definition doesn't say. We have to go to section 2 and see. So we have to start from pay, go to the different places, find out the things, what all the applicable to that particular payment, and then finally decide whether we need to deduct the TDS or not at a rate given in the column C or column D of the table. Let's move forward with this. This is what this will be applicable if all along when we see all different serial numbers where we need to deduct the TDS. This is the process we will have to follow for all this.
Just one question.
Yeah, please.
So, in the Act, when we are reading the Act, does it give the references to the sections as well? For example, in one particular place it says that you have to refer to the Act for the rates.
Okay.
Now the same way, okay, so we'll understand where the tables are there for the rates, but in the same way, does it give the reference to the sections as well where we have to look for? For example, when you are saying we have to go to section 2.
No, it doesn't give reference.
It doesn't give.
It doesn't give reference of 402.
Okay.
It says specified person, it says buyer. For 194Q we have a buyer who has to deduct the TDS. In 194, who is the buyer is there in the 194Q itself. But this table doesn't give us who is the buyer, where we have to refer the definition of the buyer. So unless and until we read from it 392 till 402, let's say 392 we can leave it as a salary by code itself. 393 to 402 will not be knowing what to refer where. Table doesn't give reference. If you go to the 402 give reference. That which table, which item they are referring for the definition of the buyer. Because if you look at 402, for buyer definition there is again a table. For different tables in 393, what we have, various places they have referred to buyer. For different buyer, there is a different definition, different interpretation in 402. And 402, when they give the definition, interpretation, there the reference is given. Note gives the reference that this note apply for which serial number. But serial number table doesn't give reference anywhere that where you have to look and find it out. So we have to know section 393 till section 402 to understand what we have to see where.
That means we have to read word by word, and then also we have to create our own references as well.
Yes.
So that
Or easier way would be to keep the old books, to refer to the old. The law has
That
not
is
changed.
the sections we have to keep there, that is always has to be there. But for us, there are certain changes is also there. So we have to refer both the books. Just referring old book may not be helpful because there are some changes is also there in the new. Yeah.
Like a slide is saying individual serial number is rank, commission and all. So while making payment, presently we have been using different sections, 194A, B, C, all those things. So will that same serial number be reflecting, or we have to use single channel for making all the payments?
The draft rules has come. Draft rules will tell all about it. We will take it in view.
I'll just add one more point. In the subsequent slides, Ganpatlal sir will also just show us, frankly, the table is so large, trying to put it on a presentation PPT gets complicated. We've tried to keep that in an Excel sheet, and you will get to see that for every serial number, there are notes. Typically what we used to go with as explanations earlier are now sitting more like a note. Okay. So you will have a case as we go through some more of the slides. A specific serial number under 393.1 will have a specific treatment. Okay. And so for that reason, unlike the existing law where, let's say 194C, everything was in that particular section, you will have to actually follow that flow chart like a checklist. Make sure you've covered everything so that you're clear as to what is the applicability, how it will apply, in what context it will apply. So, well, it's simple. That's all I can say.
He said it's complicated. That's it.
As we have seen in the flow chart, where we have to deduct the TDS, we have reached that level. After that, as you said, which challan we have to use for making payment, which form we have to file for the statement, which certificate form number has to be given for the certificate, that will also we have to add in that flow chart further, based on the once the rules get finalized. As the rules is not yet finalized, they have given the draft rules to us. We will discuss on that in the due course. So those numbers also we will have to add in the further in the flow chart to complete our entire process. We have seen serial number 1 was talking about the commission brokerage. Two items or two sections put together has become in one serial number. Now we have serial number 2, rent. Now there's a couple of sections have been put together here also. All type of the rent put together has been put into serial number 2. Any income by way of rent paid by person other than specified person, 2%. Threshold limit is 50,000 rupees or more per month or part of the month. This is similar to section 194 IB, where an individual or a HUF who are not specified person, because all others are covered, firm, company, everything will get covered under the specified. Individual and HUF supposed to deduct the TDS if the rental payment is more than 50,000 per month. Now there we have when they have to deduct, here it doesn't say. So we will come to know where it says. So rent, if an individual or HUF is paying rent to any person beyond 50,000 rupees or more per month, then they need to deduct the TDS at the rate of 2%. Then serial number 2, any income by way of the rent. So both the serial number 1 and 2 is same, only the payer gets changed. So it is also any income by way of rent. 2 also says any income by way of the rent. It's a specified person. Now who is the specified person? I don't know. Go to section 402 and find out the list. It says 2% for the use of the machinery, plant or equipment, or 10% for the use of the any land or building or land apparent to a building, including a factory building or furniture or fitting. Again, the threshold limit is 50,000 rupees per month or part of the month. Now, whether we need to deduct every month or at the end of the year. Somewhere we have seen in the beginning para of the 393, subsection 1, payment or credit whichever early. Same thing apply here also. This is equal to 194I. Now we have a note. We have not have note in 194. First serial number. In second serial number for the rent we have a note. So it's in serial number 21. Now it is referring that serial number. So we have to go and see what is the serial number 21 is. Rent paid by an individual or HO. I am giving it directly. It says other than specified person. It doesn't say individual and HO. It says other than specified person. Tax shall be deducted on such income at the time of A, credit of the rent to the account of the paid, or B, payment thereof in cash or by way of check or draft or any other mode, whichever is earlier, for the last month of the tax year or the last month of the tenancy. So what we have in 194 IB, TDS need to be deducted either in the last month or at the last month of the tenancy when he vacates, if it is in between the year. Same thing is there, but that is there in the form of a note. So like that we have various notes for different sections, different serial numbers. Item number or the serial number 3 is payment on transfer of certain immovable property other than agricultural land. We have a different places all put together, all kind of a transfer of the immovable property are put under serial number 3. Well, the item number serial number 3(1) is any consideration for the transfer of immovable property other than agricultural land. Who is the payer? Person other than person who is required to deduct tax under serial number 33. So what is 33 we have to see, otherwise any other person. Person other than person who are required to deduct tax under serial number 33. What is, it's a rate at 1% we need to deduct. A, consideration for transfer of immovable property or stamp duty value of such property whichever is higher. So we have to deduct TDS on either on the consideration or stamp duty value SDV whichever is higher, and the threshold limit is 50 lakh rupees. So if your consideration is more than 50 lakh or stamp duty value is more than 50 lakh, so we have to see both. If my consideration is less than 50 lakh but registration happens for more than 50 lakhs due to any reason for whatsoever, we need to deduct TDS at 1%. It is similar to 194 IA. Now there we have some more explanation. Now it doesn't say here whether if the transferor is 1 or more, if the transferee is less than 1, if each transferee is paying less than 50 lakh, what happens? Or if transferor receives less than 50 lakhs each, what happens? It doesn't say here. We have to look into the note. As I said, we have to look into one after the other. Then it says any consideration not being consideration in kind under the agreement referred to in section 64 bracket 40. Any person paying for a consideration under an agreement under section 67 bracket 40, rate is 10%, threshold limit is nil. From 0 you have to deduct this TDS. It is similar to 194C, which is the agreement referred here is JDA agreement. What we have under 45A, the capital gain taxable under 45A, that is JDA, that is what referred here, JDA agreement. That is now in section 67 bracket 40.
But that JDA is explained in the section as well.
It is explained in that section.
Okay.
So you have to go to the 67 bracket 14, that it is explained what JDA is. It is not explained here, the no definition is given here. Wherever the section reference is given in the table of the other sections, we will have to directly go and refer those sections on. Then we have serial number 33. Any sum being in the nature of compensation or enhanced compensation, or consideration or enhanced consideration on account of compulsory acquisition under any law for the time being in force, or any immovable property other than agriculture land, paid by any person at the rate of 10%. Threshold is 5 lakh. If the payment is above 5 lakh rupees, we need to deduct the TDS under this. If a person is deducting TDS under this, then he don't have to deduct the TDS under 3.1. So if it is come under compulsory acquisition and payment is more than 50 lakh, then our table serial number 3.1 will not apply, 3.3 will apply when it is a compulsory acquisition. Other than compulsory acquisition, normal sale and purchase transaction, we have to deduct under 393. Serial number 3.1. Now let's say what the note says. We have interesting note here. Note 1 says consideration for transfer of any immovable property under serial number 3.1 shall be aggregate of the amount paid or payable by all the transferees to the transfer, or all the transfer of such immovable property for the purchase for the purpose of threshold limit mentioned in D. So for the purpose of the threshold limit of 50 lakhs for 3.1, we have to put together, we have to see the property value, not the number of person who is getting, whether the less than 50 lakhs or more. It is if the value of the property or stamp duty value of the property is more than 50 lakhs, TDS has to be deducted. Let's say the note number 2. In case of consideration of which provision of both serial number 3.1 and 3.2 are applicable, tax shall be deducted under 3.2 only. 3. For the purpose of serial number 3.3, the income tax shall be deducted where consideration for transfer of any immovable property or stamp duty value of such property is equal to or greater than 50 lakh. Here it says we have seen the threshold limit of 5 lakh. Under compulsory acquisition, if my compensation paid is 5 lakh or more, I was liable to deduct the TDS because threshold limit given is only 5 lakh. Now here it says the value of the property should be more than 50 lakhs. So that means if my value of the property is 45 lakhs and I am paying entire 45 lakhs, will I be liable to deduct the TDS? Yes. It says for the purpose of the income tax shall be deducted where?
But threshold limit is 5 lakh.
The threshold limit there is 5 lakh, but it says it doesn't trigger. The note 3 says I have to deduct the TDS in serial number 3.3 when my property value is more than 50 lakh. If my property value itself is less than 50 lakhs, then it doesn't trigger. 3.3 will not trigger at all. So what is the use of having 5 lakh of the threshold limit? Is it not a dichotomy between the two? If the property value, the compulsory acquired property value itself is less than 50 lakhs, and let's say entire amount has been paid in a single stretch, entire 45 lakhs rupees has been paid, will I be liable to deduct the TDS? Then what? Then what was the, have to have two different things in here. What I can visualize is, let's say the property value, a single property value, as we have seen the different transferor or more than one transferee, more than one transfer or more than one transferee. If a land is acquired, agricultural land or any land is acquired, not agricultural land, sorry, because it's agricultural land is out of it. Any land is acquired by the government or anybody with the value of that is more than 50 lakhs, but the payment to various owners, that's it, that land which is values more than 50 lakhs, having 10 owners of it, each get let's say 10 lakh rupees, having equal shares of 1 crore worth of property, each getting 10 lakh rupees. In that scenario, you need to deduct the TDS on each payment. That is what I visualize because of this. If the property value is less than 50 lakhs, in my opinion, we don't have to deduct the TDS. Any other view, it's welcome.
Suppose you amended in the budget, but reference note has been amended in the budget.
No.
Sir, suppose payment is 4 lakh.
Not required. That is the threshold limit is 5 lakh is there.
They're not required.
Even if the property value is above 50 lakhs,
Then also,
and there are, let's say there are 80 lakh is the value, there are 20 members are there, 20 owners are there, each is paid 4 lakhs, then TDS is not required, because the basic threshold limit has to be seen first. After looking at the property value, we have to go to the 3.3 and see whether I am liable to deduct. Because if there is a more than having one person is less than 5 lakh, other person is having 20% share, so more than 5 lakh. So in one person's case TDS will be there, in other person's case TDS will not be. Next is income from capital market, the serial number 4. These are all payments what we are talking to only to resident, purely to the resident, not to the non-resident or all put together, both together. It's only for the resident. Income from capital market, I'll just rush it because it may not be that much applicable to all of us. So any income in respect of a unit of mutual fund or specified under Schedule 7, table serial number 20 to 21. As I said in the beginning, we have we have 16 schedule. Now it is referring to one of the schedule number 7. So if it is a unit of a mutual fund specified under Schedule 7, under Schedule 7 we have a table. In table we have to see serial number 20 and 21, or B, or unit from the administrator of the specified undertaking, or unit from the specified company. Any person, whoever paying income in this, has to deduct the TDS. Threshold limit is 10,000 sorry, and 10% TDS. It is similar to 194K. 2. Income distributed by 2 in section 223, which talk about the business trust. So any business trust distributing income as referred in section 223, TDS has to be deducted at the rate of 10% without there being any threshold limit as referred in earlier Act 194 LBA 1. Item number 3 in serial number 4, any income other than that proportion of the income which is exempt under Schedule 5 in that table serial number 2 in respect of unit of an investment fund specified in section 224, payable to its unit holder. Any investment fund is paying income to its unit holder, TDS has to be deducted at the rate of 10% without there being any threshold limit. The earlier section was 194 LBB. We have item number 4 in capital market payment in serial number 4. Any income in respect of an investment in a securitization trust. So the payment made by any securitization trust as referred in section 221, the TDS has to be deducted at the rate of 10% without there being any threshold limit. So that is related to capital market. Now we come to the interest. What we have in 194 or 193, 194A or 193. Here also we will see some interesting things. First, any income by way of interest on security. What we have in section 193, same thing has been brought here. Rate or rate in force, payment made by any person. Now there is no definition of the any person anywhere in the whole act. So any person means everybody is covered. Whoever makes payment. Any income by way of interest on security, threshold limit is 10,000. If any payment is beyond 10,000, TDS has to be deducted at the rate of or rate in the force as given in the Finance Act, every year's Finance Act, as similar to 193. Yeah.
Any person means here, even if I am not covered under a tax audit.
Yes. Any person means any person. There is no definition of the any person. As far as I have gone through, I have not found definition of any person, neither in 402 nor in general section 2. So that means any person covers anybody.
Just to add further and clarify to your point itself, section 402 clause 37 defines what is a specified person. So specified person is something which is clear, and it reads as specified person means, so clause A, any person not being an individual or a Hindu undivided family, or B, an individual or HUF whose total sales, gross receipts or turnover from business or profession carried on by him exceeds 1 crore rupees in case of business or 50 lakh rupees in case of profession during the tax year immediately preceding the tax year in which such income or such sum is credited or paid. These are specified persons. Now, any person obviously is all encompassing. It does not refer to specified person. So you have a valid point. It seems to be rather dangerous, but that's the way the wordings are right now.
It is on securities.
Yes, interest on security.
193 or
193, old 193. Yes. Then 5.2. Any income by way of interest other than interest on security when the payer is a banking company or a cooperative society carrying on business of banking or a post office for a deposit made under a scheme notified by the central government, and payment is made to senior citizen, the threshold limit is 1 lakh rupees, and if it is made to any other person, it is 50,000 rupees. It is part of the 194A. What we have in 194, it is the same thing what we have here also. Any income being interest other than interest on security where payer is specified person other than person referred to in serial number 52C. Threshold limit is 10%. 10,000 rupees, what we have already in 194A. So 194 has been divided in two serial numbers, sub-serial number, where payer is the banking company or post office or a cooperative society or any other person. So for any other person it's given differently. Earlier it was part of the 194A only. Now when you make a payment, when payer is fine is a specified person or banking company, but when you make payment to bank, whether you are liable for the TDS. So specified person includes individual, HUF, partnership firm, individual HUF having a turnover above particular limit what he has just said. Partnership firm. If you are making payment to the bank, are we liable to deduct the TDS?
We should go and see exceptions.
So we have to go to 393 bracket 4 or 393 bracket 5. Is it the exempted person? So this is how we have to refer one after the other to an understanding, and we have certain notes also in this. Note 1 says, in serial number 5, 2 and 3, the interest income credited is paid, income credited or paid is in respect of time deposit with a banking company or time deposit with a cooperative society or deposit with a public company form and registered in India with the main object of carrying on business of long-term finance for construction or purchase of houses in India for residential purpose and is eligible for deduction under section 32E, and the person mentioned in column C has not adopted core banking system. Solution: the threshold limit in column D shall be computed with reference to the income credited or paid by the branch of each of such person. So we have a SBI bank or we have some cooperative society who are doing into the banking business. The SBI has adopted core banking system. So when it comes to the threshold limit, it has to look into all the branches of the entire bank put together, bank as a whole, including all the branches, what is the total payment they are making. Let's say I have an account in 3 different branches of SBI and have a time deposit and getting interest from the 3 different branches. If all together it crosses 50,000, TDS need to be deducted. Whereas if a cooperative society having a different branches, but it doesn't have a CBS system, core banking solution, in that scenario they have to look into the branch wise. each branch has to see whether it crosses the limit of 50,000 rupees or 1 lakh rupees as the case may be, and then accordingly to deduct it. Note 2. The person responsible for making the payment referred to in serial number 5, 2 and 3 of this table may at the time of making any deduction increase or reduce the amount to be deducted for the purpose of adjusting any excess or deficiency arising out of any previous deduction or failure to deduct during the tax year. So this we don't have in the section 194A earlier. On each deduction you are supposed to deduct. Now you can, if you have deducted more, it can be adjusted at a later part. If you have deducted less, you can deduct at the later stage in the same tax year. Now will this lead to interest component? Has to check. Because there will be a short deduction. But if I look at this note 2, it will not amount to short deduction. Because it allows me to deduct at a later stage if there is some error has happened. Especially in case of a banking company. When the total interest payment till a particular date is less than the threshold limit, they may not deduct. But when it crosses the threshold limit, they have to deduct for the entire amount. Because it's not transaction wise, it is for the whole tax year. So there will be nothing called short deduction in that scenario. That is what my understanding is. But if you look at 194C, it is similar to 194C, I am just comparing. With each transaction is 30,000, less than 30,000, but aggregate it crosses 50,000, 1 lakh rupees. We need to deduct at that particular time an entire 1 lakh rupees without there being any obligation to pay interest because I have no liability at that particular time. But here if we see the liability, it says threshold limit is this much, but it doesn't say the each transaction being less than the particular amount. So because of that, if the initial payment is less than that, and I presume that it doesn't cross 50,000 rupees, and I have not deducted TDS, I can take shelter under note 2 and say that, look here, the deficiency is because of the threshold limit is not crossing during the year, I have not deducted, now I have deducted the whole amount and paid. So in the return, I think we can take the entire amount in that particular quarter and file the return.
But then, are we then saying?
So while you are saying that while the return you can do the necessary adjustment, but then are we then saying that law now currently is saying that as per the law you have to deduct the TDS and hence the interest also could be liable? As per the law now, right?
No, as per the law now, and in my opinion, no, there will be no interest liability.
Okay.
Then we have serial number 6, payment to the contractor. This is payment, contractor, fees for professional fees and technical services, all put together has been made in one serial number. 6.1 say any sum for carrying out any work including supply of labor or carrying out any work in pursuance of a contract between the contractor and a designated person. Earlier we have a specified person, now the specified person has been replaced by the designated person. I don't know what made them to replace it. At the same meaning what we have a specified person, same thing is there as a designated person. So who has to deduct? Any designated person. It was earlier specified, it's now any designated. What is the rate? 1% if the contractor is individual or HUF. 2% if it is other than individual or HUF. Threshold limit, each transaction less than 30,000. No TDS is requirement if the transaction is more than 30,000, or if your aggregate is more than 1 lakh rupees, you need to deduct from the entire. This is similar to what we have on 194C. It's on the similar. Only thing for the exemption, for other things we have to move to the different sections which were there in 194C itself. Now 6.2 says any sum for carrying out any work including supply of the labor, for carrying out any work in pursuance of a contract or by way of fees for professional services or by way of commission, not paying insurance commission referred to in serial number 11 or brokerage. Who is the person has to deduct? Any person being an individual or HUF other than those required to deduct income tax as per serial number 61 or serial number 63 or serial number 12. So this is similar to 194M, where an individual has to deduct the TDS who doesn't come as a specified person, where he make a payment beyond 50 lakh rupees for his personal purpose, any contract payment above 50 lakh rupees, or any professional fees above 50 lakh rupees, or any commission above 50 lakh rupees for his personal purpose. Because of that, he is not liable to deduct, because he is not a specified person. An individual and HUP being not a specified person, he need to deduct the TDS when the payment crosses 50 lakh rupees. For example, I am constructing a house. Given a contract for more than 50 lakh rupees, I need to deduct the TDS. Similarly, commission or the professional fees, if I am making payment more than that, I need to deduct the TDS. Then we have something similar to 194J, any sum by way of fees for professional services, fees for technical services, remuneration or fees for the commission by whatever name called, other than those which is tax is deductible under section 392 to a director of a company, or royalty, or any sum referred to in section 26(2)(h). Earlier also, these are the all 5 items were there in 194J. Who has to deduct? A specified person has to deduct. At what rate we have to deduct? We have to deduct at the rate of the 2% if it is for technical services, if it is for the royalty, and if it is for your payment for the other than royalty, that is 290. To the royalty nature of the consideration for the sale, distribution or exhibition of cinematographic film, or payee engaged only in business of operation of call center, the TDS is 2%. Otherwise, TDS is 10% from the professional fees, or payment to a director is a 10%. Threshold limit for professional fees, technical services, royalty, or any other sum referred in 26(2)(h) is 50,000 rupees. There is no threshold limit for the payment made to the director. Which from 0 you need to deduct the TDS at the rate of 10%. There are some note attached to it. In serial number 6, if the sum is paid or credited for carrying out any work specified in section 402(47)(e). Now note refers to the definition given in 402, where the work definition is given. If any sum is paid or credited for carrying out any work specified in section 402(47)(e), tax shall be deducted at source on the invoice value excluding the value of the material, if such value is specifically mentioned in the invoice. Otherwise, on the whole invoice sum, if the material value is not mentioned separately. Then we have dividend. It is similar to 194. Any dividend, including dividend of the preference shares paid by any domestic company, 10%. It says without threshold limit under 194. But originally, if you see 194, there is a threshold limit of 10,000, which is not here, but it is there. That threshold limit is gone somewhere else. It is sitting somewhere else. They could have given the threshold limit here itself in case of an individual, threshold limit of 10,000. For other, threshold limit nil, as it is given in the interest what we have seen. But they have said threshold limit nil. And tax shall be deducted at source before making the distribution or payment of the dividend. That's so simple. Now we have other cases. We have 7 specific items. What is not there in those 7 specific items, which are the payment is made to the resident, has been all bundled together in item number 8, serial number 8. This is any sum under a life insurance policy, including the sum allocated as bonus on such policy, other than the amount not includable in the total income under Schedule 2, table serial number 2. Pay by any person at the rate of 2% if the payment exceeds 1 lakh rupees. It's similar to 194DA. Now there is some exception to this, which is there somewhere else, we will see.
So that does dividend include deemed dividend also?
No. Now our 194Q, it says any sum exceeding 50 lakh rupees on purchase of any goods, any person being a buyer at the rate of 1%, threshold limit as per note 1. So there is a note 1 is given for finding out the threshold limit when we have to deduct TDS at the rate of 0.1%. Now who is the buyer? As I said, the definition is there in 402. And that definition is very elaborate. For buyer, there is different buyer for different sections. Almost we have 5 different definitions of the buyer. It gives in 402 subsection 6. Then your total income of a specified senior citizen after giving effect to the deduction allowable under chapter 8 and rebate allowable under section 156 by the specified bank, making a payment to the specified senior citizen. There is a definition of the specified bank as well as specified senior citizen is there in 402. Rate in the force as what we have in the 194. If I am getting only pension and having a bank account interest on the bank account of the same bank, I give a declaration, then bank do the calculation of my tax and deduct that much tax and close. So I don't have to file even return also.
Just taking one step back to what Ganpatlal said, the definition of buyer itself has a table. Another table which also has columns which says who should be considered as the person to be included and the person to be not included. So each step we have a lot of filtration that needs to be done before you are able to establish applicability, non-applicability, exemption at every level.
It is what we have 194R. Any benefit or purchase, whether convertible into money or not, arising from business or the exercise of a profession of the resident. So specified benefit is given perquisite kind of a situation by the company to the business house, then TDS has to deduct at the rate of 10%, threshold with 20%. Any sum on account of sale of goods or provision service of the e-commerce participant facilitated by e-commerce operator through the digital or the electronic facility or platform. So it's e-commerce TDS basically. E-commerce operator has to deduct at the rate of 0.1% without there being a threshold limit under section what we have under 194. Then we have any sum by way of consideration for transfer of VDA, virtual digital assets, deduction by any person, whoever make the payments at the rate of 1% without there being a threshold limit. Then we have various notes for the clause 8.
What about the partners? They are not mentioned. 194T.
It has moved to 393.3 under any other person. Partner being a resident or non-resident, in both the scenario you are liable to deduct the TDS. So this is only for the resident, purely applicable to resident. If this payment is paid to non-resident, we have to 6393.2 where we have another big table is there listing out some 20 items. So it says deduction of tax under serial number 82 shall not apply to a transaction on which tax is deductible or collectible or any other provision of the Act. So when it is related to purchase, TDS is applicable. If it is not applicable anywhere else, then only we have to go to the deduction for the TDS on the purchases. The tax shall be deducted on sum exceeding 50 lakh rupees. So if your purchase is beyond 50 lakhs, you have to deduct the TDS. After the once it crosses 50 lakh rupees, up to 50 lakh rupees, we don't have to deduct the TDS. Note 2, provision of serial number 84. Convertible of into money or not arising from the business or profession. So what it says that shall also apply to any benefit or purchase whether in cash or in kind, or partly in kind or partly in cash, and he has to ensure that where the cash portion is not sufficient, then he has to see that the TDS has been recovered and paid before releasing the perquisite. In serial number 8.5, for deduction of tax, the provision thereof shall take precedent over any other provision of the chapter. So if we have a e-commerce, so e-commerce provision will take over any other provision, including 8.2, 8.3 all. Who is the e-commerce? Some definition is given here. Then there is another note. Note 4, in case of the transaction with provision of serial number 8.5 are applicable, along with the provision of serial number 8.6 for the deduction of tax, then irrespective of anything contained in note 3, tax on such transactions shall be deducted only under the provision of serial number 8.6. So when it is related to VDA, tax has to be deducted, though it may be through the e-commerce operator, through some digital platform. Tax has to be deducted under serial number 8.6 only, not under serial number 8.4. So 8.6 take over. Now there is a dichotomy, if to say. There it says irrespective of any other section, TDS has to be deducted under this section, this clause only. Now this will take over any other provision. So this being a latter part, we will say in case of a VDA, this will take over e-commerce deduction. The provision of serial number 8.3 shall take precedent over any other provision of this chapter, and tax shall be deducted under this provision. Now this is another says, this will take over any other. So what is 8.3? When it is payment is made to the senior citizen, specified senior citizen, in that scenario, all other section will be overridden by this particular provision, this particular serial number. Then for the serial number 4 and 6, where the consideration or benefit of requisite provided as the case may be is in exchange of another VDA, where there is no part in cash, in respect of serial number 8.4, or wholly in kind, or is partly in kind and partly in cash, and cash portion is not sufficient, then he has to ensure that before releasing, tax has been paid. This is 393.1, which gives the various tables, again specify who has to deduct the TDS, in what circumstances they have to deduct TDS, at what rate with what threshold limit. Looking into the various other provisions we have to see in the different sections before the actual deduction. I think there is a
just one more point to add to what Ganpatlal. This particular provision now brings in a new category of persons. We have known of senior citizens, we have known of super seniors. Now there is a specified senior citizen. Seniors were 60 plus, super seniors were 80 plus. Specified seniors are 75 years or more. So that's a new category.
This was there in the earlier act also, but we have not looked into that seriously. It was there in the old act also. Same section says same thing only. Now this is 393.2. Before we go into 393.2 with the payment related to non-resident, we will break for the tea. Tea is ready, it's waiting. So we will break for that and we will reassemble after 15 minutes. We will be rushing after that because we have to cover a lot. Welcome back, friends. Before going for the tea, we were discussing on TDS deduction in tax deduction in relation to payment made to the residents under section 393.1. As we are already heading to 7, we have a limited time to spend and we have a lot more to cover. We will try to see tables little faster. We may not go into each item by item. Wherever the important thing is there, we just look into it. We try to look 394.4, 393.4, 393.5, which have some relevance in chart what I have given, how it's going to impact that in that fashion.
just a request, because since the time is less, as you rightly said, it will be good to understand the changes or the new things which are there, including the rules as well. For example, if let's say you believe that something is relevant for us, for example, the section 195 kind of thing, what are the kind of key changes that are being useful? Yeah? Thank you.
So we have seen 393.1 talking about the payment made to the resident. 393.2 talks about the payment made to non-resident. It is specific. These are the payments made to the non-resident, specifically to the non-resident, on which we are liable to deduct the TDS. Again, it is form of a table where any income or sum of the nature specified in column B of the table below is credited or paid to the prescribed person specified in column B during the tax year to a non-resident specified in column C. The person responsible for paying such income or sum shall deduct income tax on the amount of such income or sum at the rate specified in column E at the time of the credit or payment, whichever earlier, subject to the provision of again subsection 4, 8 and 9. So this is sum and substance of 392, that any payment made to the non-resident who is specified in a particular column of the table, payment made by a particular person has to be deducted at the rate as specified in column E. We have a separate table for that. So instead of putting all those sections like what we have put in 393.1, we have straight away put into the Excel sheet. So we will go to the Excel sheet. This is table what refers to the payment to be made to the non-resident on which we are liable to deduct the TDS. Any income referred to in section 211, basically it's payment made to the sports person by any person at rate of 20%, similar to 194E, no change. Then what the payment related to 194 LC, either more or less it is same, there is no change. So wherever there is no change or relevant for us, I'll just go into that particular serial number of that table, rather than we'll go to the 3 which is more important because it's applicable to the both resident and non-resident. It is payment by the Indian company or business trust for income by way of interest payable in respect of money borrowed from the foreign company in foreign currency, 5% in 194 LC. And the different things are there. Any income by way of interest payable in respect of money borrowed from a source outside India by way of issue of rupee denominated bond pays any non-resident, not being a company or a foreign company, any payment by Indian company or business trust, again 5%, 194 LC, no change. Next item is also related to the interest payment for the money borrowed through the issue of the long-term bond, that's 194 LC, this is all related to interest payment. Then any income by way of any other interest, where it is taken by the any infrastructure debt fund referred to in schedule 7 table serial number 46. So many places we will have to go to the so many places to find what is the definition of each item. It's similar to 194 LB. Then item number 6, any distributed income referred to in section 223 being in the nature referred to in schedule 5. So we will have to refer all those things. It's similar to 194 LBA 2. Then 194 LBA 3, similar to that, any income distributed referred to in section 223 by any business trust to a unit holder of a business trust. Then any income other than that proportion of income which is exempt in respect of unit of investment fund. So a payment made by any investment fund in respect of any income to a unit holder of investment trust has to TDS has to be deducted. Again, the rate in force is nothing but the rate what is there in the Finance Act. Then we have a securitization trust. Any income paid by the securitization trust has to be deducted. Any income in relation to the mutual fund or respect of unit, payment to the again non-resident or foreign company by any person as per the note 2. So we have certain notes also in this also. There is no bifurcation like interest, rent like that in this. It's all are in the continuation serial number. Any offshore fund, if any income is borrowed, the long-term capital gain is arising to a offshore fund, then TDS has to be deducted at 12.5%. That's similar to 196B. Income by way of interest or dividend in respect of bonds or GDR. Payment made by any person, maybe a company or government or anybody at the rate of 10% as in the 196C what we have earlier. Then again income by way of long-term capital gain in relation to the bond and GDR. Again at 12.5%. If it is interest, it is 10%. If it is a capital gain, it is 12.5%. Plus applicable surcharges, what is there, we have to follow. Next is any income in respect of security referred to in section 210(1), table serial number 1. Any foreign institutional investor by any person as per the note 2, 196D. Any interest not paying interest referred to in again serial number 2, 3, 4, 5 or any other sum chargeable under the provision of this act, not paying income chargeable under the head salary. So this is similar to what we have under 195. So what are the up to 1 to 16 is the specific related to the specific to be paid by the specific person. But this is in relation to the general payment which are not covered above. Any payment which is as per 195, what was the taxable? As per the 195, what we say, any interest payment or any other capital gain or any dividend which is paid to the non-resident, all will get covered under this. Payment by any person and rate in force as rate we have in the Finance Act, we have to look into it. Then we have various notes is there. For serial number 2, 3, interest payable shall be income to the extent to which such interest does not exceed the amount of interest calculated at the rate approved by the central government. For serial number 10 and 50, tax shall be deducted at the rate of 20%, or where an agreement referred to in section 159(1) or 159(2) applies, the payee, and if the payee has furnished a certificate referred to in section 159(8) as the case may be, then income tax shall be deducted at the rate or rate of income provided in such agreement for such purpose, if such rate is lower than 20%. So maximum rate of the TDS will be 20% in this scenario. Even if the agreement says the higher rate, subject to the maximum of 20%. If such rate is lower than 20%, if it says in the agreement, so if the agreement rate is more, it will be restricted to 20%. Then we have some more notes related to the same thing. We will not go into much into it. We will go to the next. 393.3. is the section which talks about payment which are not specific to the resident, which are not specific to the non-resident, which are general in nature, which apply to both resident and non-resident. So we have only payment to the resident covered by subsection 1, only specific to the non-resident covered by subsection 2 of 393, and which is applicable to the both resident and non-resident, common to both, comes under 393.3. Again we have a table here also. where any income or sum in the nature specified in column B of the table is credited or paid to person specified in column C during the tax year to any person, the person responsible for making payment of such income or sum shall deduct income tax on entire amount of such income or sum where the amount or aggregate of amount exceeds the threshold limit as given in column D or on net winning as per note 1 of the table at the rate specified in column D at the time of payment or credit, whichever is earlier, subject to the provision of again subsection 4, 5, 6, 8 and 9. So this para is more or less similar to what we have in subsection 1, 2. Again we will go into the table. Go to table 3. Visible? So here is also is a serial number 1, 2, 3, 4, 5 continuously. So first is income from winning from online games as referred to in serial number 2, from any lottery, crossword puzzles or card games or other games of any sort or gambling. Payer may be any person, may be a company, may be a government, may be anybody. Rate in the force and threshold limit is 10,000 in case of a single transaction. So it has to be looked into transaction by transaction, not in aggregate. So each transaction is above 10,000, you have to deduct the TDS. If the each transaction is winning is less than 10,000, you don't have to deduct the TDS. Similar to 194B. Then we have any income by winning from the online games. Whoever playing the online, organizing the online games, and the payee may be anybody. So rate in force, threshold limit as per note 1. 194BA, similar to 194BA. Then again income by way of winning from race horses. So any person being a bookmaker or a person to whom a license has been granted by the government under law for the time being in force for horse racing in any race course or for arranging or wagering or betting in any race course. Again threshold is 10,000 rupees for each transaction and rate in force, similar to 194BB. Item number 4. Any income credited or paid to a person who has been stocking, distributing, purchasing or selling lottery ticket by way of commission, remuneration or price by whatever name called. So basically a person who sells the lottery ticket, whoever gets the commission from that lottery ticket or any interest or by way of commission, on that TDS has to be deducted. It to be deducted by any person who organized the lottery, and the rate of 2% with a threshold of 20,000 rupees under 194G, what we have earlier. 5. Any sum paid in cash or on account of one or more accounts maintained by any person. This is similar to 194N, where we have a deduction on the cash withdrawal. Here there is some change in the threshold. What we have is a threshold of 20 lakhs if the returns is not filed in the last 2 years. That has been removed and it says 1 crore rupee in case of recipient being person other than the cooperative society. If it is a cooperative society, then it is 3 crore rupees. Other than cooperative society, if anybody is withdraw cash, if it is beyond 1 crore, there will be a TDS. Up to 1 crore, there will be no TDS. Who will be deducting? Any banking company, any cooperative society or a post office at the rate of 2%. Then any amount referred to in section 80 CCA 2A of the income tax 1961. So still we have to deduct under new act TDS referred to the income referred to in 80 CCA. Any person at the rate of 10%, threshold limit being 2,500. So what is the relevance of 2,500 we have today? I don't understand. 190, whatever is there, we have to go with it. Similar to 194EE. Then the last item in this is any sum in the nature of salary, remuneration, commission, bonus or interest paid to a partner of the firm or credited to his account including capital. It's a remuneration to a partner. Any person being a firm at the rate of 10%, threshold limit between 20,000. Similar to 194T what we have. Here I have some interest in, I'll just come to that detail later when I come to the deduction part. Then we have some notes to this. For item number serial number 2, on net winning in the user's account of the pay at the end of the tax year. Whenever online games, you may not, you will be keep continuously playing. So TDS has to be deducted on the net amount. Sometimes you may have loss, sometimes you may have profit. So at the time of the year end, you have to see what is the net winning. If he has, then TDS has to be deducted on that. Or if it is between the period, if he withdraws his winning amount, the TDS has to be deducted at that point of time. That is note 1. We have note 2 again for the serial number 1 and 2, where the winning or net winning, as the case may be, is wholly in kind or partly in kind and partly in cash, and cash portion is not sufficient to take care of the TDS liability. Then he has to ensure, the payer has to ensure that the payee pays the tax or pays, he collect the money from the pay the TDS and then release his winning amount or winning item. For serial number 4, the person responsible for making the payment shall deduct tax at the time of credit of such sum or at the time of the payment of such sum in cash or by issue of check, whichever generally is okay. Not able to read the note. Read the note 4. Something is there are 3 notes. The deduction of tax. Okay. This is only 3 notes. That is section 4. Back to this. So these are the 3 subsections which covers when you have to deduct the TDS. Under which subsection you have to deduct for whom? 1 for resident, 2 for non-resident, 3 for both resident and non-resident. Then we have subsection 4, which is the deduction of tax at source shall not be made. Now this is carving out an exception to the general rule that in this scenario you have to deduct, but if you fall under this you don't have to deduct. So the deduction of tax at source shall not be made under the provision referred to in column B of the table below in respect of income or sum along with the conditions specified in column C. So again there is a table which says this is the column B says referred to in column B, and in respect of the sum referred in column C or the conditions given in column C. Again we'll go to the Excel sheet, because putting all those in there, PPT is taken a huge number. That's why I have restricted it to 393.1 only. Rest I have kept as it is in this one. It's not visible. Bigger. I'm sorry, I'm not that familiar with Excel to do all those things. So first thing we have seen in 393.1, table 1, serial number 1, item number 2, commission or brokerage. In case of a commission on brokerage, if commission or brokerage is paid by BSNL or MTNL, to their public call franchise, then TDS is not applicable. So, as I said, you have to look there, come to 393.4, see whether any exception or any exemption is given. So, in case of a commission, we have an exemption to the extent of if BSNL paying commission to its franchisee, public call office. Then, rent referred to in section 393.1 table, serial number 22. So it says income by way of rent credited or paid to a business trust. Being a real estate investment trust, in respect of real asset referred to in schedule 5, this is a not schedule related to this. We have a 13 schedule, one among them, 16 schedule, one among them is schedule 5. And in that there is a table, we have to see serial number 4. If that falls under that, business trust falls under that, then we don't have to deduct the TDS on the rent paid to the business trust. So again we have to go somewhere else apart from this. Then compensation on acquisition of certain immovable property referred to in section 393, serial number, table serial number 33. Income by way of any award or agreement which has been exempted from the levy of the income tax. Under section 96 of Right to Fair Compensation Act, Compensation and Transparency in Land Acquisition, Rehabilitation and Resettlement Act of 2013. So if my income is exempt under that act and compensation is paid which is exempt under this act, I don't have to deduct the TDS. So I have to see this act also, whether I falls under this particular section 96 of that act, whether my compensation falls in this. If yes, it falls in this, then on that compensation I don't have to deduct the TDS. Income in respect of unit referred to in section 393, table serial number 41, if income is in the nature of capital gain. So it's related to capital market. Income from unit of a business trust. Income in the nature referred to in schedule 5, table serial number 3BB. If the special purpose vehicle referred to in the said serial number has not exercised the option under section 200. So those are section I also have to read actually. So in a particular section, if they exercise the option and not if the option is exercised, you have to deduct the TDS. If not exercised, then TDS is not required to be deducted. Interest on security referred to in section 393(1). Table serial number 51. Interest payable on various bond issued by the various authority, that no TDS is required to be deducted. National development bond issued by the institute and authority or any of the central government, various other bonds. Then interest payable to, if you are paying interest to LIC, GIC or a business trust, then you don't have to deduct the TDS.
I'll just intervene here. Our friend had initially raised this question because under table for 393(1), Civil 5, we had said that income by way of interest on securities, the payer was any person. But this clarifies the set of people who are covered and those who can actually issue such securities. So it's not specifically any person. Those get qualified here, NSDL and the governments.
No, interest payable on these bonds are exempt. Apart from this, any other security is there which may be issued by anybody.
Those that issue securities, but these are the ones who will not require to do TDS.
These are the bonds on which TDS is not required. If it's anything else, any other security is there is a liability. With maybe any other person may be there into picture. Then interest other than interest on security referred to in section 393(1), table 5.2 and 5.3, that is 194 area interest. Interest income credited or paid to any banking company. If you are making payment interest to a banking company, you don't have to deduct the TDS. These are the exemptions. So if you are making any financial corporation established by under a central or state or provincial act, to LIC, to UTI, company or cooperative society carrying on the business of insurance, such other institution, associated or body or class of institution, association or bodies which the central government may for the reason to be recorded in writing, notify the interest income paid, credited or paid by a cooperative society other than a cooperative bank to its member. By a cooperative society to any other cooperative society in respect of deposit with a primary agriculture credit society or a primary cooperative society or a cooperative land mortgage bank or a cooperative land mortgage bank, or in respect of deposits other than time deposit made after so and so date, except there is exception to exception, except when where the total sales gross receipt or turnover of a cooperative society exceed 50 crore rupees during the tax year immediately preceding the tax year. Now how we will look at it for the tax year 26-27? There is no tax year prior to that. It doesn't give reference to the earlier financial year. It talks about the tax year only. We don't have tax year in 1961 Act. So what we will do?
It will be taxing.
Similar to 194Q, what we have seen that serial number 8(2). Previous year 50 lakhs, 10 crore turnover, but there is no tax previous tax year. So what we will do? It will apply or it will not apply. 1 year we don't have to do anything. I leave it open to all. Exception.
There is an interesting observation in this. When you look at note number 7, we are at 393.4 where we are saying these are not covered by TDS. And in this exception, under clause C, there are sub-items. If you look at sub-item number 7,
It says by a firm to a partner of firm, but it is related to covered under 393(1) only. So where we are deducting TDS on interest to partners is under 393(3) serial number 17, not under 393(1). So that means, is it then why this exception is given or why this exemption is given here? Interest paid to a partner by the firm. This is an exemption. That means what our understanding when we have discussed, we said if a firm pays interest to its partner on money borrowed by the firm, not as a capital investment, as a money borrowed by the firm and firm pays interest, this will doesn't come under 393(3), it will come under 393(1). And if that is the scenario, there is an exemption is given on that interest. So if I make an interest payment to my partner on the amount borrowed as a loan, not as a capital, as a loan, I am not liable to deduct the TDS. Can this be a tax planning? Instead of taking amount as a capital investment and deduct the TDS on that, can I take as a borrower, as a loan and pay interest without deduction of the tax TDS?
I think 194A might apply.
Huh?
If you are treating that as a borrower, then 194A might apply.
No, 194 will apply. Now in the new exemption is given. If a firm pays,
We cannot be saved. If we are saving here, we cannot be saved under that 194A. Whatever.
no, 194A will not be there from 1426.
Whatever the new section.
So that, in that section only this exemption is given. This is the exemption.
You have to look at the substantive intent of the law.
No, I agree with you. This may be removed, this may be changed. But as on date, can we do that?
I don't think so. It will be up for challenge and contention, because any partnership from borrowing the money either by way of capital or working capital is going to lose it in its business.
Correct.
So you are only trying to hair split the interpretation and be up for litigation soon.
No, but then why this exemption is given? It is a
There can
specific
be a
exemption
delayed
given
payment
by
of
the
salary. There can be a delayed payment of salary for which interest is paid.
so there is a specific mention of all the other categories of payouts to partners. And particularly this has been given as an exception from in the listing. So the question arises, does this imply you need not do TDS?
Could it be on settlement of goodwill
at the time of retirement of a partner, they have to make a category.
That will not
That
be
is
any
the
others.
it is talking about only interest.
Interest earning.
It doesn't talk about the goodwill, it doesn't talk about the royalty or anything.
It raises
It
this-
purely talks about the interest. An exception is given only for the interest paid by the firm to its partner. So which interest is going to qualify under 393(1) is going to get an exemption. Now that can be only what my understanding is, it can be only on the borrower. Other than borrower, there cannot be interest payment to a partner. We'll move forward. That is 393(4), which give various exemption to the general rule given under 393(1), 2 and 3. Then we have 393(5), which again gives us certain pays has been listed out. If you make any payment to those pays, you are not liable to deduct the TDS. It says, irrespective of anything contained in this chapter, the tax shall not be deducted by any person from any amount payable to 1. Government, RBI, corporation established by or under a central act which is under any law in force exempt from the income tax on its income, to a mutual fund as specified in Schedule 7, serial number 2021, where such amount is payable to it by way of interest or dividend in respect of a security or shares owned by it, or any other income accruing or arising to it. So these are the entities. If you are making payment to these people or these pays, you are not liable to deduct the TDS, though your amount or the item on which you are making a payment is liable for TDS under 130, 393, 1, 2 or 3. But if payment is made to these people, you don't have to deduct the TDS. This is a blanket exemption to the pay itself. If government is a pay, you don't have to deduct. If you buy anything from the government, you don't have to deduct the TDS. If you are making any payment, commission payment or interest payment or anything to the government, you don't have to deduct the TDS. Or if you are making any payment to the RBI, you don't have to deduct the TDS. Then we have 393(6), which was nothing but similar to giving a certificate or declaration. It says the deduction of tax shall not be made under provision referred to in column C of table below in case a person as specified in column B, if such a person furnishes to the person responsible for paying any sum or sum in the nature referred to in such provision a written declaration in duplicate in such form and manner as may be prescribed, that the tax on such person's estimated total income of the tax year in which such income or sum is to be included in computing his total income shall be nil. So again we have a table for this. This is nothing but what 15G or 15H, what we used to give. It is different form numbers, and who can give, when it can be given, is there in the table 5. An individual being a resident can give in relation to the payment of accumulated balance due to an employee referred to in section 392(7), insurance commission 393(1), serial table 1, serial number 11, rent 393(1), serial number 22. So they have listed out in which case an individual being a resident can give the form 15G or 15H. It says other than individual, any person not being a company or a firm or an individual covered in serial number 1 can give the form in relation to serial number 1, column C, item A to F. So again in relation to accumulated balance, etc., except the dividend. In case of the dividend, other than individual cannot give, only the individual can give the form for dividend. Then there are also some note is there. The provision of this section shall not apply in case a person referred to in column B of the table, other than an individual being a resident who is age of the 60 years or more at any time during the tax year, if the aggregate of the amount of any income or sum of the nature referred to in provision mentioned in column C of this table is credited or paid or likely to be credited or paid during the relevant tax year in such which such income or sum is to be included exceeds the maximum amount not chargeable to tax. So even in case of an individual who is not a senior citizen, who is the other than the age of the below, so who has the below the age of 60 years, in that case, even if he gives the form declaration saying that my total income will be nil, but if my payment from the payer side is more than 2.5 lakh, or sorry 4 lakh, which is the new slab amount which is not chargeable to tax, if payment is more than that, TDS has to be deducted, declaration will be of no use. Only for a person who is above the age of 60 years, and if his income is nil, we can take this form into consideration even if payment is beyond the threshold limit of amount not chargeable to tax. Then the rest of sections are not of much relevance. I'll just read it out. Whoever received the declaration in 6, yeah.
TDS on sale of immovable properties for resident is covered under this 1% of.
Yes.
For non-resident, where is it covered actually? TDS on sale of immovable.
It will come under 139, 393(2) under last item. Under section 195, what we have under section 195, it will come under that serial number. Any other sum
specifically mentioned?
There is no specifically mentioned. It's any other sum as per the rate specified. So we have to go to the Finance Act, see the relevant para of the Finance Act for the TDS rate for the non-deduction and various items listed there. Accordingly, we have to do.
For example, current assessment year, 26-27, it could be 12.5% or 20%?
12.5% plus surcharge and cess. It is 12.5%.
But is it specified in the Finance Act?
It is there in the Finance Act.
12.5%?
Yes.
That's correct. Just to add further, there is a proposal in this budget to change the approach of how TDS should be done in the case of non-residents, because there is this difficulty about residents getting the benefit with 1% rate, and non-residents you have to typically, non-resident sellers typically have to obtain a TAN and then proceed with this. That is proposed now to change. So your issue in that sense may get resolved once that comes.
But rate may not.
He's talking about the rate. He's not talking about the procedure.
The rate
remains
is 12.5. That's fairly clear and specific.
That is procedural change.
12.5, no index benefit. So that's absolutely clear.
So whoever received, yeah.
TAN has not to be applied for deduction.
Going forward,
no.
Once
We have to pay with the same PAN number. You can pay in your PAN number itself.
And this will be application from this.
Once the financial
year 26, tax year 26-27.
Yes.
393(7) says if you receive any declaration, you have to file that declaration with the prescribed authority within 7 days. 7 days of the next 7th of the next month for the forms received in the last month. Now, what we have earlier, it was a quarterly based filing of form 15G or 15H. Whatever you receive in the entire quarter, we have to file by the 15th of next quarter, and if it is the last quarter, but 30th of the next month. So mean 30th April in case of the last quarter, otherwise 15th of the 15th July, 15th October, 15th January. Now that has been reduced. It has made monthly basis. It has to be noted that it has been monthly basis. Whatever declaration has been received by the payer has to be deposited, has to be filed with the prescribed authority 7 days from the end of the month in which the form is received. This is the one change has to be taken note of. 393A, irrespective of anything contained in subsection 6, the deduction of tax shall not be made from the interest paid by an offshore banking unit on borrowing from or deposit made on or after 1st April 2005 by a non-resident to a person not ordinary resident. So this is offshore fund, we'll just leave it. Next 9 says, irrespective of anything contained in this chapter, the deduction of the tax shall not be made from any payment to a person for or on behalf of new pension system trust referred to in Schedule 7, table serial number 41. So it is related to the pension trust. If any payment is made to the pension trust, TDS is not required to deduct it. Then we have subsection 10. We talk about the recognized provident fund. In case other than the referred to in section 392, under an agreement or an arrangement, if the tax chargeable on income of recipient referred to in this chapter is to be borne by the payer, then for the purpose of deduction of tax, the income shall be increased to by an amount which after deduction of tax as per the provision of this chapter become equal to net amount payable under the such agreement or arrangement. This is nothing but grossing up. If it is as per the agreement, you have to pay 1 lakh rupee to a particular person, and that is what agreement says. No? You are liable to deduct TDS on that. So you have to make a gross up and deduct the TDS. So your payment become 1 lakh. Accordingly, you have to gross up. This is what all. The 11th says the credit of any income or sum to any account by whatever name you call, by suspense account or outstanding liability or whatever it is. The moment it is credited in the books of account, TDS is triggered. You have to deduct the TDS. So this is all about what we have in section 393, 392 and 393 related to the TDS. Then we'll go to the TCS, over to the Shirish. Thank you.
TDS, long and exhaustive. Thank you, Ganpatlal. It was quite a marathon there. Okay. There is this obscure section under the Income Tax Act 1961 called 206C, which shot into fame and relevance only in the last 5 or 6 years. Earlier to that, the section existed, most of us didn't have to bother, because it covered only specific segments which were typically unorganized, and to reach out to those buyers was a challenge. So they had tried to keep it limited, that in such situations, the sellers will collect the tax and remit that. The same section 206C now stands as section 394, which reads thus that, again, there is a table. Thankfully, this table is not as long, so we'll quickly be able to go about with it. That every person who is specified in column C of that table shall collect tax on the receipts which are mentioned in column B at the rate which is in column B. Instead of credit or payment, here it is debit. So when you receive the amount or when you record this in your books, you need to make sure the tax collection is done. One thing which you will observe, Income Tax Act 2025 does not carry a word called notwithstanding. All those have been replaced with the word irrespective. So we've Control F, Control V, find, replace. Irrespective of anything in subsection 1, collection shall not be made. This is a unique situation. This is of course there in 206C also. In respect of buyer who is a resident, if he furnishes a written declaration, he must give it in duplicate, in that he is using these goods for the purpose of his manufacturing, processing or producing of articles or for generating power, and that he is not involved in the trading of these items. In such case, TCS will not apply. If that person gives such declaration in 2 copies, the recipient of these 2 copies must further proceed, submit this with the Principal Chief Commissioner or Chief Commissioner or Principal Commissioner or the Commissioner. Those are the specific words which are mentioned there. And as Dr. Bai mentioned, this is also now a monthly exercise. What is this table? Alcoholic liquor for human consumption, tendu leaves, timber, or other forest produce, scrap sale, minerals which are basically coal or lignite or iron ore. In the case of motor vehicles, so whenever you and I go to purchase a car, be prepared, there is TCS. It has existed and it will continue to exist. Remittance under the LRS. However, here there are a couple of conditions. Thankfully, no note, nothing. It's right here. On the right hand side, on the left hand side, you will see the rates have changed. So before the law came into effect, the rates have already been harmonized. Most of them are now at 2%. Only motor vehicle continues to be at 1%. So when you buy the next car, which crosses 10 lakh rupees, it will continue to be at 1%, not 2% as the others are. In LRS, Liberalized Remittance Scheme, which is given by RBI through the FEMA regulations, it used to be 5% if it were for the purpose of education or medical treatment. That has now been brought down to 2%. However, if it was not covered by education or medical treatment, then the rate is 20%. So either it is 2% or it is 20%. Many of us like to do, I'm sure organizations and institutions are also organizing foreign tours. The rate, again, 2% or 20%. And in case of usage, basically where it is a license for toll plaza or parking lots, then it is 2%. Now, TCS will not be made by the authorized dealer. This is in the context of LRS. On such amount, if it were already covered by the tour operator, then you need not go under the LRS. Basically, serial number 7 and serial number 8. If you're covered by serial 8, you need not look back or do it again under serial 7. Furthermore, if this is part of an amount that is taken out of a loan, you need not do the TCS. Loan which is for medical or education purpose. Forest produce, of course, is defined as the same which is given under the Indian Forestry Act. Now, what should we do? Let's for a moment go with the belief, flowchart, checklist, everything done. TDS, remedy. You need to give certificate. Either certificate to say there is lower rate of tax, this can be given by the payer. The person who is receiving will need to make an application. Mind you, this is also a proposal that is now brought up where they intend to automate the process of making the application and receiving the no TDS or lower rate of TDS. Of course, the nuances of that will be known once the scheme is brought in. So the payer will make the application. The earlier process was that the assessing officer should be satisfied that it is deserving of a lower or a no TDS, in which case he will issue such low TDS or no TDS certificate, and the payer will have to abide by that instruction and deduct tax at the rate which is mentioned in such TDS certificate. What happens in the case of a non-resident? In the case of a non-resident, the obligation has been pushed to the person who is making the payment. The payer himself can make the application and seek for a lower no TDS in the case of where it is a non-resident. The other observation which we should also possibly give a note to, when it is a non-resident, the provisions under 393.2 also reflect that if there must be TDS, at a lower rate. It is not that the rate will be reduced. Now they will go about trying to evaluate from the sum payable. When we look at section 195, it says sum chargeable to tax. A similar situation or wordings are under 393 also. The officer is going to identify how much is the amount which can be considered as income, and you will do TDS on that amount, which need not be the entire sum that is paid. So this is a slightly different exercise compared to how it used to be in the existing provisions. So when the person responsible for paying to a non-resident any sum as mentioned in 393(2) makes an application, then the determination of the appropriate proportion of the sum chargeable to tax has to be done by the assessing officer in the manner that is prescribed. And based on this, he will issue his certificate, and the payer will thereafter remit that amount based on the amount, the proportion that has been identified.
See, to add here, this is a complete paradigm shift. It has been moved from payer to payer based certificate. What earlier under 197 used to apply, the payer, the NRI has to apply to the AO saying that this is going to be my income, and accordingly instead of 10% you give me the lower rate of tax on the entire amount. Now the entire paradigm shift has happened. The person who is making payment can make an application saying that this is going to be taxable income. There will be no change in the rate. The rate of the taxation remains same. The income portion itself is get reduced. So in the long-term capital gain scenario, where we need to deduct the entire tax on the whole sum, the entire sale consideration, now an application can be made by the payee himself, by the buyer himself, to say that this is long-term capital gain. Based on the computation, this is the cost of the seller. So reduce the cost, this is my net capital gain. On this net capital gain, I will deduct the TDS. AO will approve the income. Say, okay, yes, this is the capital gain taxable, you deduct TDS on this at the applicable rate. This entire paradigm shift from the payer to payee and the rate to tax.
When payer to pay it comes, how does the pay know what is his income while calculating? He may invest in bond and all. How
He has to give the details. So basic details, cost can be taken into consideration.
Cost, what about the
May not be the other part, as you said, the investment and all. Unless he make and give the details, it cannot. But at least cost part can be taken into consideration. Like that, if any tax or any other expenses part is there, commission or anything in that sort, that can be taken into consideration.
Also, right now you pointed that he will determine the lower amount, not
Yes.
the tax will remain same, yeah?
The tax rate will remain same. The deduction rate will remain same. If it is a 10%, 10% continue to remain 10%. If it is a long-term capital, then 12.5% will continue to remain 12.5%. But it will be deducted on the lower amount. Instead of the entire sale consideration, it will be deducted on capital gain portion. So amount will get reduced.
Earlier it was the rate was reduced.
Yes.
So just to continue further on that, see, if you look at section 195 as it stands today, and we look at a sale of an immobile property, let's say it is sold for 5 crores. The buyer is required to simply take that 5 crores, do the 12.5% plus surcharge and cess, TDS, done and complete. As of now, yes, you can make the application under 197. Now, if it were to be taken under the new act, then the seller can say, look, my cost is this. You make the application reflecting that this is the income. There is an amount which is received and there is an amount which is the income. This is the income. Based on this, let them make the certificate to indicate that this is the taxable element. So 5 crores is the total amount. Let's say 1 crore was the cost. Then 4 crores is taxable. So the advantage you get is instead of having a TDS on 5 crores, you go with a TDS on the 4 crores. That definitely releases so much more working capital for the seller. So that's the advantage.
If the buyer gives some false information, who will be held responsible?
Those are of course procedural parts. This
He
of
says
course.
I will invest 50 lakhs in bond, and if he doesn't do, I have taken into consideration.
The TDS is based on the income, it is not based on the investment proposal. So TDS might still have, of course, let's wait for the rules to come through for that, but this is where that could be. So whenever, yes, you have a question.
So just reconfirm why you clarified already. So we are saying there's a major shift is basically from the seller to the buyer application. That's the one.
Yes.
The second is, yes, earlier as well the LDC, the lower deduction certificate, will receive.
Earlier, the lower deduction certificate will receive on the basis when we are able to project to the assessing officer that the income is this example. So they will reduce the percentage. So the new change is, while again we give the similar kind of cost estimates and everything, and rather than on the giving the percentage of 3 or 2 or 5%, they will say, okay, this is the value which I approve, and you deduct the tax accordingly. So these are the two key shifts which are there.
Yes.
So shifts from gross to net.
Gross to net.
Can we still apply for lower tax instead of if we find lower tax rate is
Well,
much
the
better?
application might go as lower tax, the amount will be lower tax, but what they will determine is the income, which is the proportion of the total amount received. That's how.
The question of LTDC not there.
Pardon me?
LTDC not there. Lower tax rate reduction certificate is not there.
Right now. It is.
Tax amount, sir. No.
So what they will do is, see, at the end of it, the amount that has to be withheld is the tax. Now, will you go with gross or will you go with receipt minus cost and therefore the income and corresponding tax? So it is still a lower tax. The methodology changes. Yes.
Let's see that based on the incident, this general electric loading, I have not deducted TDS on the capital gains. So I have taken the reliance on the ruling of the Supreme Court, where I am not deducted TDS because the same results in a capital loss, but I have not applied to the AO for a lower deduction certificate. So will the payer be an assessee in default?
So what you're saying is that the buyer who needs to do the tax withholding has not done the TDS.
Yes, because it is a capital loss situation for the seller who is a non-resident, and but we have not obtained the LDC. We have not applied the AO saying that.
The rule or procedure would be simple. Your obligation as a buyer is to do the withholding. Now, under the new law, if you are able to get details to say this is a loss, make the application reflect that this is a loss and therefore no TDS may be required. But to not do anything brings you in default.
Okay, because I'm not positive.
You can't take your decision that there is a loss. It is AO who has to decide. You cannot decide.
The AO must confirm that there is no case for TDS in such situation.
If it is gain, you decide. If it is lost, officer will decide.
If it is a gain, you decide. If it is a loss,
Officer will decide.
please make sure the officer decides that there is no difference. Alright,
Sir,
moving
only
forward.
one point, sir. Even today also, if NRI is selling a immovable property, I have to get a declaration that it is a long term or short term, no, sir?
So,
Because rates may change, you know.
that is one aspect. The point is till 31st March, you are covered by the requirements of 195 with 197. So you will have to go on the gross value. He may tell you it is short term or long term. If he tells you it is short term, you can definitely change the rate from 12.5 to a much higher rate.
Yes.
And when it's a non-resident, rates can go 30% and plus. I'll move further. Some of these provisions have existed in the Income Tax Act 61 as well. The tax deducted will be your income. Furthermore, the tax for which is deducted overseas and you're claiming the credit of such tax in your return, such amount of tax will also be considered as your income. Compliance and reporting. Please make the application for TAN the form is no longer 49B. The form is called 134 if you are a government or a government agency. The form is called 135 if you are not a government or a government agency. Okay. What happens if you fail to deduct or fail to remit or pay? Simple, you are considered an assessee in default. This is simple, it continues as it was earlier. All the procedures for an assessee in default, the penalty, the prosecution, depending on intensity of the transaction, will apply. There is effort to decriminalize, but procedures stand as they are. Processing, you are allowed to make adjustments for arithmetical errors, incorrect claims earlier, or the interest and fees which will be computed based on this. Of course, before the order is passed by the assessing officer for TDS, we will have to give an opportunity for this. Section 400 is unique in the sense that various sections in the old law had specific powers. These have all now been concentrated into this one section, which gives the government the power to remove any difficulty that they come across on ensuring the procedures of TDS are followed. The old law, section 205, now rephrased as 401. If an amount is deductible and the deductor has deducted such amount, you cannot be asked to pay that same amount again. While this is good law, we come across a lot of notices where the assessee is being asked to pay, although there is a TDS. The reason, of course, is procedural because it does not reflect in their Volta's portal or the 26As as we call it. There have been some rules that have now been brought in. They are sequential. Yes, they're visible. The rules were spread all over the place and now have been made more sequential. So, without going into each and every one of these, and for want of time, there have been a few new rules introduced, like where you will come across for non-residents units where they were involved in funds. That is now covered by Rule 210. New forms have been brought in. Form 13 for lower tax or nil tax. Let me use more easier visuals. Form 13 is now Form 128. Salary TDS. No more of Form 16s. Please ask for 130s. No 24Qs. They're Form 138. 26Q is Form 140. All of these have been sequentially numbered. Of course, why they stand where they are is your guess is as good as mine. If the TDS return belongs to a non-resident, earlier we used to file 27Q, now it is Form 144. TCS returns, which were 27EQ, are now Form 143. Immovable properties, 26QB or 26QC, now stands as 141. 26AS, there is no such word from 1st April. Please call it Form 168. All of us are encouraged to issue 15CA, 15CB, Form 145 and 146. Specified financial transactions, SFT is 165. PAN application form is no more 49A, which is a random 93. Form 15G and 15H, which we did talk about, is made into one single form, 121, which is a consolidated form. Few other changes and items which were important, which we thought should come to your attention. Please bear in mind that there is a clear indication by 31st March of 2026, make sure all your TDS related corrections and adjustments are done which relate to periods beyond 2 years. It will not be allowed subsequently. So wherever necessary, please check with your clients. If they are not addressed, adjusted or set right, you may not get the opportunity thereafter. Any other point, any other questions?
49B.
Form 49B is, as I had mentioned, 134 if you're a government or a government agency, or 135 if it is non-government or other than government agencies. Any other queries or questions?
Right.
Previous slide. Previous slide. Previous slide. Form 16A will be 131. My apologies, I missed that.
140, 141, 142, 142 is missing.
The form exists, but not on the
It may be
point of
related to
relevance and
something
importance. It is sequentially numbered. There is a form 1, and there are as many forms as you can think of, up to at least 144, which seems to be the highest number right now.
Basically, it is all serially
There is
numbered.
165.
What we have A, B, C, it's all serially numbered 1, 2, 3, 4, 5, 6. Like the income tax section, rules also serially numbered. No 31A, 31B like that.
Curiously, this was one occasion where they could have done an alphanumeric system of forms, but has not happened. I mean, we can see that in company law, we can see that in GST, we can see that in foreign exchange law, but income tax seems to have gone with straight single numbers, only numeric, no alphanumeric.
Income will be only numbers.
Income is only numbers, very well, that's fair.
Income is approved by the TDS officer. Then the SCM officer again, he has a control.
Let's keep that for our practice. Any other queries or questions?
Other income tax will provide on GPS to navigate all this.
Yes, on a lighter note, for the entire approach that is happening under Income Tax Act 2025, corresponding income tax rules, if you were to go to the website, they have a particular file called the Navigator, but that relates to the rules. And our friend has said, while the rules go with the Navigator, we may need a GPS just to get the TDS provisions clear.
Especially TDS we require.
Thank you all.
My question related to the e-commerce.
Yes,
Shirish and Ganpatlal.
yes, Naren.
E-commerce, that 194.0, earlier they used to deduct 194.0, and they also we are paying commission or some charges to the e-commerce operator. So there are a department circular on that, there is no need to deduct on 194H and C. Similarly, something is there here in the new act.
As per the new act, you have to deduct on commission and separately, has to be deducted separately.
There is no clarification on that.
No, you have to deduct.
The clarification is that the deduction has to be.
But earlier I think there was a circular is there, if the e-commerce operator is there, something is there is no need to deduct on 194H and C.
So,
No, that may not be useful under the new tax law, because they said it has to be deducted. Even if you are not liable to deduct for the e-commerce operators, the TDS need not deduct because of some other exemption. Still on commission, on broadcasting, on advertising, hosting, you have to deduct the TDS.
Thank you.
Thank you.
Good evening, members. As we draw this insightful session to the close, on behalf of ICAI Bangalore branch, ICAI Simplification, management member, today's to propose vote of action. First and foremost, a huge thank you for our eminent speakers for the evening. C.H. Ganpatlal, our past chairman, whose depth of experience always brings a unique perspective to complex tax regulations. C.H. Shirish for meticulously breaking down the nuances of TDS, TCS under the Income Tax Act 2025 and fresh amendments proposed in the Financial Bill 2026. The clarity with which you both navigated these technical waters has left us better equipped for the upcoming filing season. And we request to accept our memento as a token of appreciation.
TDS TCS. Check for TDS, for TCS. They would allow